Today is 28 September. Market trade on narrow range bars with average volume up 7.3206. Now this happens after yesterday bearish gaps. The fact that today we trade on narrow range bar, that shows that market lack enthusiasm. Our immediate resistance is actually this pivot high here, which is at about 3224. The more significant resistance is at about 3260. Immediate support is actually at this pivot low here at 3180. The more significant support is actually at 3140. But market likely to actually start in this trading range, very similar like what we have seen in the past over here. Currently there is lack of directions in the market. If you take a look at the weekly charts, it gives you some clarity. If you notice actually yesterday, after last week bearish by itself, so this week itself is basically a temporary halt. We may well actually move downwards to test this support. So this is something we're going to take note of. Let's take a look at the US markets. This is S&P 500 on the weekly charts. Now over here, after the trend line breaks, there is an attempt at this trend line, and it actually failed break the support. So this in effect is a double top. Breaking this is generally negative, but it's approaching this very significant support level, just about 4,200. So this is the level to watch. Now the other things we also need to actually take note of is that by and large the major moving ranges are rising, but they're actually broken. Important when you approach the 200 days to see whether it can hold. So the fact that we have this deep retracement, it does show that market is not as strong as we wanted it to be. So we just have to actually wait it out. So it does indicate that perhaps we'll need a longer time for the consolidation to complete. This is Nasdaq. Quite similar patterns. Again, the double top formations, those essentially neckline was actually breached, but it's actually traded a narrow range bar just at that level. Again, on the daily charts with the major moving averages, it actually broken the 100 days through a gap, and it's important to watch when they approach the 200 days. It's important we like to see a bounce off from here. So far the 100s and 200s are still rising, so we cannot conclude that the cycle has changed. So very much is still on the up cycle. It's just that we have mid-term retracement. And of course, one of the possible reasons is perhaps the 10-year treasury yield. As mentioned before, that is actually likely to actually break on the upside. And this is what we have seen, making new high. And usually high yields is generally negative for the equity markets, as it translates to higher operating business costs. So this is the weekly chart, very neat consolidation patterns here. We have very nice saucer, and that is a pullback just below that resistance level, and it was taken out quite convincingly. The Federal Reserve has actually mentioned that the interest rate is likely to stay elevated for quite some time, so that provides a catalyst for the break on the upside, and we expect another interest hike from now to the end of the year. Now we also noticed that actually the Brent crude actually surged up. Notice the white range bar here. It's actually tapping this trend line. Now if we can actually trade within this band itself, it's likely to continue to move upwards. And of course, this is as a result of the tightening supply. We see some movement in the oil and gas related stocks, but by and large actually this will translate to actually higher costs, business costs, and also inflations. So again, this is generally negative for equity markets. Now let's take a look at some stock we have been discussing. This is UMS. This stock is perhaps much clearer than other tech stocks. After this run-ups at the resistance, it actually pulled back. It had been trading sideways in the process. It closed out of daylight. Over here we have a gap, and this is pretty obvious. We have the resistance at 130. The last 2 days we actually see two inside day, and as particulars today's volume is actually very low. We'd like to look for eventually break above the high here of 130. We just have to contend with some overhead resistance here. So again, it's important. We need to see an increase in volumes in order to actually move up and perhaps test 135, 136. As mentioned, actually this is perhaps much clearer compared to the other tech stocks. This is Franken. So you will notice the pattern is much untidy. Notice the retracements are punctuated we get. This is something which we generally do not like. So again, we just have to actually wait it out and perhaps let it consolidate before taking a long stock again. Likewise for STAX, the upward move has fizzled out. So you notice there was this attempt here, kind of fizzled out, and in fact it break this support level before it bouncing off. So again, at this point in time, the 13 SMAs has actually flattened, so it's likely to continue to trade sideways. The other stock perhaps worth watching is Creative, which experienced some move recently. So this is in reactions to the news. They have some tie-ups with Skyworth. At this level here, we experience this is a high level resistance. We can see the pullback from here. Again, we'd like to see what happens. If you can trade sideways, closer to daylight, look for eventually break above this level here. This is at 183. Venture generally negative. Today trade a wide range reversal bar. If taken out, let's support. Look for a throwback here and look for a new setup to short the stocks. This is Yangzijiang. This stock is currently consolidating. Notice the 13 SMA crisscrossing. Now over here we see a break of this resistance level, but it kind of failed, and quite immediately it actually broke the support and it bounced off and now stuck within these value areas. So I'd like to actually see what happens. The fact that 1326 the slope is actually flat, it does indicate there's lack of trend characteristics at this moment. Again, it all depends whether it can actually hold above this support level. Feeling this will be actually negative. Rex International. We see a gap up today. This is perhaps in reactions to this surge in the oil price, but it appeared to be short-lived. Notice actually the rejection of the high, and this is also a pretty obvious resistance as mentioned before. 20 and 20.5 is a psychological resistance. This is where the bid size changes. This gap provides some kind of supports, but by and large this is quite a deep retracement. Mentioned previously that this is a very nice setup. We take advantage of the momentum build, and this has been a very impressive move. And obviously here we have an extension bar, and we can take partial profits at the close of the extension bar and take further profits over here, or at least during the subsequent open here, because it's pretty obvious that actually it is actually losing momentum and is likely to retrace. So again, today gap up itself does show that there is some overhead resistance here, so we got to watch out. If you can trade sideways from here, that will be generally better.